So I'll be giving a quick breakdown of this EUR sale I took yesterday using the same logic I explained on the XAUSD trade I took on Monday. So we'll be following the exact same narrative to understand what price printed on the EUR. So let's start by going through the daily time frame to check what price is doing on the hour time frame. Just like I said earlier, we are trying to know where price is coming from, where price is currently at, and where price is likely to go to. So let me clear my charts. Um, First thing first, we are going straight to the daily time frame to know what the price is up to. So as at that yesterday, price landed on this daily point of interest right here. So that's a basic order block. Like I said earlier, on that XAUSD trade, I said I prefer order block that is actually mitigating another order block, another pseudo order block. So we have something like this. You can see we have this block mitigating this block, and this block as well mitigating this block. So that ticks my criteria. So after taking note of that, and there are times whereby you might be looking at the size of the other block, feeling it might be too big. So just try to reduce your time frame to maybe 4 hours to refine it a little bit. Though not to miss entry, it's better just to leave it at that same spot. So I'll just have it as this refined version. So now back to the daily time frame. So what are we expecting at this point? We're actually expecting some sort of reaction. We don't necessarily need price to travel too far that much to get a nice RR trade. So what do we do? After we established where price is coming from, next thing we have to know the kind of liquidity that has been taken into that point of interest. So let's spot our liquidity. We have this swing high right here that was engineered, and also we have this previous day high that was engineered before price get there. Why are we checking this? We are checking this in order to know where price is most likely to go to next. That's the major purpose of identifying our liquidity that was induced. So after knowing that the liquidity that was induced at this point was previous day high, and also, if I'm not mistaken, let me try to see if we are sharing. Okay, yeah, we have previous week high and previous day high. So in that case, let me label something. We have this previous week high, and also it's kind of overlapping with that previous day high. So let me just label it as PWH plus PDH. So in that case, what should be our target? If previous day high liquidity is taken, we are targeting internal of that same day, right? And if previous week high liquidity is taken, what are we targeting? We are targeting previous day lows. So meaning we are free to target the internals within this candle and also the low of this previous day. So if that is the case, let's just go straight to the lower time frame, not to waste much of our time. So let's go to the 15 minutes time frame to observe the kind of reaction that happened at that spot. So first thing first, let me use. So what can we observe? After price took out this previous day high, we will be reading the internal structure that was formed before price got to that high. So we have this low, high, try to mark it out. We have this low, high, low, high, low, high, low, high. So what do we want to see? that same illustration I did the other time, internal structure approaching the point of interest. We have a first break, a pullback, and a second break. And we're expecting this pullback to be what? To be used as inducement for our entry. You would ask me that, what if we do not have that double break? What do I expect in such case? I expect something like this. High, low, high, low, high, low. If one low is broken, then I expect this high to be induced. And if this particular high is induced, I'll be expecting something like this. So this case, price will be reclaiming that exact order block that was meant to be respected before. So in such case, I'll be having this position right here. At times, we can have that pullback directly before the break of structure, and at times you can have it like this. So that's not the discussion for today. Let's just move on. So now, according to this, you can see the double break of structure right here. We have this first break of structure, structural low. We have another break of structure right here. So, like I said, the pullback before the second break will be what? Will be induced. So basically, when price induced that pullback, on a norm, my point of interest that will be selling above this pullback is just this. We have this level right here, this supply zone, clean supply zone. But I did not sell directly from there. I was not kind of early. So the reaction has happened already when I got to my chart. So price gave a reaction, tapped into that supply zone and pulled down. So we call this kind of entry, we call it single candle order block. Meaning the order block that is being created after liquidity is being taken into a point of interest. So the order block is showing in form of wick right here, but if you go to a bit lower time frame, like maybe 5 minutes or 3 minutes, we would be seeing it as up candle before a down candle. You can see you have this bullish candle before the bearish candle. So when price closes below it, right, you can have your entry from there, from the body of it, or you can pick the whole block like this at times. So let's just leave it this way. So we are setting our entry on that week right on 15 minutes time frame. So I have my entry right here, stop loss above. And now based on our targets, all checklist met, liquidity taking. Based on this type of liquidity, previous day high, what are we targeting? The internals of the previous day high that was taken, meaning it is valid to target this. It is valid to target this. It is valid to target this. But taking a good look at this, we said this previous day high is also overlapping with this previous week high. So it is also valid for me to target previous day low if previous week high liquidity is taken. Because higher volume participants are resting above previous week high liquidity, which is kind of powerful to actually go and liquidate a previous day low. Because previous day low, the volume of previous day low is lower in degree to that of previous week. Probably I'll be explaining more on that on another video. This way, weekly is more powerful than daily. So if weekly liquidity is taken, it can target daily low. Same thing with if weekly liquidity is taken in terms of previous week low, it can target daily high. So we have the targets 1, target 2, target 3 based on that of daily high. But based on that of this, we can actually target this. So let's see how price flows. So it actually depends. I'm still on the trade actually. My major volume, I took two position. First position was closed at 5 hour, and second position is still holding. So let's see how it goes. I'll just be watching for the reaction because the minimum target of that daily liquidity is already met at the internals already. So anything can happen from here. So let's just see how it goes. So basically, that's just the explanation using the same exact idea I explained on XAUSD. So I don't want this video to be too long so that you can come back to it, and so that will be all. Ensure you subscribe and give a feedback on the comment section. Thanks for watching.